But let's focus on, the GST Council meeting. The 50th meeting of the GST Council, well, it concluded yesterday. And the panel said that online gaming, horse racing and casinos will attract 28%. This will be levied on the full value of the funds that gaming companies charge their customers. The tax will take effect after the amendments are made to the GST law. Mr. Nitish Mittersain, the founder and CEO at Nazara Tech, joins us on the show. Hi, Nitish. Thanks so much for joining in, and good to have you on the show. Well, I've looked at the clarification you've given, and real money, well, gaming, that forms only around 5% of your revenues. So safe to assume that the remaining 95% of your business doesn't get impacted at all. But you also mentioned that there will be various M&A possibilities in this segment. That's real gaming. Will that be shelved now, or will you go ahead?
Sure. So to start with, it's important to understand that Nazara is a very well diversified gaming platform. We operate in multiple segments of gaming across multiple geographies and across multiple business models. So to that extent, the impact of this particular announcement potentially on our, skill-based real money gaming business, which is limited to 5% of our revenues in FY23, will be minimal. And that is what we have clarified already. Of course, Nazara has been, acquisitive in nature. We always interested in partnering with the great companies, founders and management teams in the gaming space. And we continue to pursue these opportunities across all the categories and segments that we are operating quite aggressively. This includes the skill-based RMG space. But of course, with this development, which has just happened yesterday, we will, of course, have to see how this plays out, the relevant impact to the industry and our own strategy there. It's all work in progress at this point of time.
So you'll not be pulling back on your plans? I mean, you'll have to alter those plans, right? Because now the viability of the business itself is taken a hit.
Our M&A plans do not get impacted across the various segments that we're operating. Like I said, this particular segment of RMG, we will, of course, have to review our plans
on RMG. Got it.
So just to clarify, Nitish, even on the other aspect, I mean, your other segment, esports, which forms the bulk of your revenue, or even Kidopia, esports, or some of the other games there, where at the end, the player does get a reward of sorts, and sometimes that can be a monetary reward. Now, I don't know how many of your games have that model at play, and could there be an interpretation issue over there? Because if there is any online game where there is a monetary reward towards the end, then perhaps it could come under this 28% ambit?
No, I think the difference really here is that this particular taxation is linked to the amount that the players are wagering or betting on the skill-based real money games, which does not have sports. There is no entry fee charged. And therefore, that would not be. This would not be relevant in that case.
No, but just to clarify this, the whole outcome of the meeting yesterday, Nitish, was that the GST Council is making no distinction between game of skill and game of chance. I know this was a matter of litigation in the courts. I think in the Karnataka High Court, if I'm not mistaken. But at the council level, all online gaming is being treated equally and is to be taxed at 28%. If it's real money gaming, and there's no distinction whether it's game of skill or game of chance. So does that impact any other part of your business as well?
No, in our understanding, it does not.
Okay. So just to take Nigel's point forward, I mean, you said that you will have to review your future plans with respect to real money gaming. That was a big area, a big focus area that you were looking at. I just want to ask you, I mean, of course, you'll go back to the drawing board and see sort of how things play out. But a lot of people are already questioning the viability of real money online gaming with the developments that took place yesterday. Where do you stand on the debate?
So I think, first of all, you will appreciate that it's very early. It's just happened yesterday. And we, as well as the industry, right, is reviewing what has come out. And there are very active associations such as AIGF and others, which will definitely, pursue how the risks of or the challenges posed by this can be mitigated. From a Nazara perspective, again, it is a bit early for us to, define a clear-cut strategy. Obviously, we will have to pause and review our RMG strategy. But if you will appreciate, Nazara has grown in the last many years across several categories of business very rapidly. And therefore, while RMG, of course, was a prospective area that we were getting quite interested in, you will also appreciate that since the time of our IPO, we have always said that we are waiting for regulatory clarity to take a larger move in this particular segment. So I think we do not have any limitation of growth opportunities. In fact, in the last year or so, we have very actively pursued many M&A opportunities because globally, due to market sentiments, we have seen many assets available at very attractive valuations. So we have a very strong pipeline of investments that we look to make even outside of RMG, and we will continue down that path very aggressively.
Okay, I just have one clarification. Players pay money to participate in the esports competitions, right, that you conduct. And when they do, they have to pay tax, right?
No, sorry, that's incorrect. In esports, players do not pay any participation fee.
Okay, so there's no participation fee in esports for the players. Got that. I want to understand what the industry would be doing according to you. Do you think the industry will challenge this going forward? And what do you see as the consequences of this? A lot of the smaller startups, etc., do you see them move abroad?
I think you will definitely see the industry try and challenge or work on trying to find a solution here, because this really is going to be very painful for the industry. And I can see the associations getting very active and trying to get a consensus on what we can do here. So I think you will see that play out over the next few days. In terms of startups, of course, the younger startups, especially in the skill-based RMG space, are going to struggle a lot because raising any capital will become impossible for them and sustainability will become a challenge. So I think a lot of them will potentially also go out of business. And lastly, I think moving abroad may not really solve the problem. You still have to pay tax if you are, operating in to the Indian consumers, and unless you go underground, which is not a way any startup can really work. So I don't think that's really a solution for anybody.
Okay, so Nitish, just to wrap things up and to go back to the main clarification that you've issued today. The understanding is that for your esports segment, which is the bulk of your revenue, I think over 50%, you're saying since players don't have to pay any entry fee upfront, there is no question of taxation, and therefore this 28% doesn't apply. If you could just finally tell us that for all these other segments, what is the rate of tax that a player needs to pay? And once again, I ask you once again that how many of your games, or let's say, what part of your revenue segment involves a monetary reward, maybe towards the end of the game? I mean, right now, the whole thesis is on the upfront money a player is paying on chips, etc. But I'm just trying to understand, in how many of your games is there a monetary reward involved at some stage of the game, maybe at the end, at the winning stage? We just need to keep that in mind, given that taxation is a sort of a moving piece here.
Look, one of our main segments of revenue generation is through the gamified learning space with our popular apps such as Kidopia and Animal Jam. And these, because they tend to younger kids, do not obviously have any inputs or outputs of winnings or money related to winnings. So I think that segment itself has it contributes to about 30% of our overall revenues. Even in the segment, we are only tournament organizers. The games are not even ours in most cases, and within the game there is no payouts that happen. These are tournament prizes that are paid out, and like I said, the teams that participate also do not pay for participation. So that clearly also comes under this ambit of this current law.
Okay, well, thank you for all of those clarifications. Appreciate it. The stock was under a lot of pressure. In fact, even this morning, the stock is down almost 13% in pre-opening. So let's see how that shapes up. But for